Greetings, everybody. This is Jeff Scott. It is 11:45 p.m. on Saturday night, so obviously the markets are not open, the futures are not open, etc. And this is my top-down review. I'll just move some stuff around for the weekend of August 12th. Saturday night tonight, but stated for the 12th because it'll be Sunday by the time I finish. I entitled today, as you can see, was Friday's turkey shoot for the Bears, a one-day wonder, or a shot across the bow. Again, this is for 8/12/2018, and my contact email is hgsidoc@gmail.com. Disclaimer, this is for education purposes only. Any recommendation in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. That means I have paid for every tool that I use, and nobody pays me to say good or bad things about anybody's programs. Trading involves risk. You are solely responsible for any investment decisions you make. Sometime on Sunday, I will be putting out part 2 of this, and part 2 will be reviewing my favorite options trade, which is a synthetic call, essentially. And to me, it's a way to take a trade, lower cost of entry, 2 different trades combined. And if you're right, it's a great way to multiply your returns. And if you're wrong, you have to know how to manage it, since it seems like other people are starting to copy the trade, which is great. I think I should spend a couple minutes about how I manage it. So that'll be coming out sometime on Sunday. And obviously, many people, including the Options Industry Council, think that options are risky, and therefore you need to be careful with options trades, and I refer you to the OIC website where you might find more information. Great. Not to spend a lot of time here. I think I've said this quite a bit in the past. I'd like to think that I started with canceling. It was improved by Woodward and Brown, Ian Woodward right here, improved further by Morales and Catcher. George Lee is a great trader. I've learned quite a bit from him. Van Tharp, the king of money management. Sager from Superior Profit has got some neat indicators and very consistent with a canceling approach with top-down investing. And then lastly, and most importantly to me today, is John Person. And John's been just a great asset in my trading, both from an author. He has some great indicators. Some of them are free in Trade and Thinkorswim, but you really don't get the full piece until you buy his package for TradeStation, especially for scanning. He's a mentor, friend, and if you have a chance to spend some time with John, I highly recommend it. What do I need in my desert isle besides high-speed internet? Well, TradeStation and Thinkorswim, I use them on these videos. They're very important to me. I think Genesis is a great thing to have, but frankly, if you don't do futures, I can do most of what I do in Genesis and the other programs. There are some interesting scanning features, and John's stuff is fully supported there as well. And then I use HGSI and EdgeRater for most of my analysis, and sometimes I'll look at seasonality in certain websites. HighGrowthStock.com, that's my favorite program for analysis. And again, I'm independent of this. Here's the URL. If you go to the free 30-day trial, it's clearly free. In fact, he won't even ask for your credit card, he being George Roberts. And if you go to investing strategies, you'll get the opportunity to see hundreds of videos. Now, if you're a Mac user, this is a native Windows program, so you'll have to have Boot Camp or Parallels to run it. I actually have some videos somewhere on the site about how to do that. Stock patterns are cyclical. I've said it before. I feel like we've just truncated the top of this. Every time it looks like we're going over, we go back up, and so on and so forth. Based upon where we are in the patterns, we're probably more closer to the top than we are towards the bottom of the rotation. But this has been a market that changes daily, so it's hard to trade this market. In fact, I'm looking at the Dow futures, and we've really been chopping ever since July 23rd, 22nd, 21st. We've had day after day, and up, down, up, down, up, down, up, down, up, down. It's a hard market to make money. I contrast that to, perhaps, I was looking at some of the dates a month earlier than that where we had several days in a row that the market was up. So this has been a choppy market and one that is challenging. Therefore, I have raised cash. I've taken smaller positions. And not only have I taken some longs and some shorts, but I'm actually selling premium as well. So if you look at how Friday ended, and this is sort of my just a sector analysis, you can see energy had some green in it, as did, I believe, utilities. So I'll look for the green and I'll find utilities. Hello, I know you're here somewhere hiding. Well, actually utilities were mostly red. I guess that's with the interest rates dropping perhaps. But Friday was a tough day. So if you can look at it, energy had green and not much else had any green in it. Now let's just look at the major markets, and I like just to drop into Thinkorswim because I can go into the right upper corner there, and hopefully it'll open up in a second. And it'll give me the opportunity to maximize the sell. So here we are, and let's go to a full year's worth. Looking back about a year on the E-minis, which is the S&P futures, I have a couple of trend lines at the top. It's just kind of a Darvis box, and we're at the top of it. We had a person sell signal come in Friday, so that has to be concerning, at least over the short term. I'm not saying long term, I'm saying short term. We did stop at the 17-day moving average and bounce. So maybe that's a good sign, but we shall see. I'll step away for 1 sec. Okay, here's a one-year view of the NASDAQ futures. Now just go back 1 second and just to remind folks that we hit the high of the year on January 29th on the S&P, at least on the E-mini futures. So we still have not taken out that high. Got close, high being about 28.7850. The NASDAQ futures are a little different as the high of the year actually came on July 25th. So we're just a couple weeks off the high. And again, higher, a lot closer to the highs of the year than the low. And you could see this was an easy time to make money, a nice trend. And we've been in chop, even though we keep getting higher highs and higher lows. If I look at the Dow futures, let's get the same year's view. And again, easy time to make money up until we peaked January 29th. And very choppy, although in an uptrend. Again, once we feel like we're getting to new highs, we pull back over and over again. And where are we at right now? Look like we're at that period of time where we're going to pull back. Where's your targets? Well, you stopped at the 17-day moving average. That might be enough. But you got the 50 and the 200. So the high road scenario to me would be we bounce from here. The middle would come back down, touch the 50, and then the 200 is not much farther beneath that. If I look at the year chart on the Russell 2000, what do we see here? We peaked here in June and have really gone sideways. So, again, there are markets like between this buy signal May 4th up to the high on June 20th, which was a market that you made money on, and we've been really chopping ever since. So we have had periods of time in each of the major indices, similar to now, that's been very choppy and very difficult to make money without a trend. Here's the VIX. Let's give it a full year's worth as well. And we can see going back, we've had one big move, and this was right after the market peaked. And once the market peaked, it came back down and the VIX rose. But we've had small starts and stops, but for the most part on this daily chart, we are living underneath the 200-day moving average and in a place that is a little higher than we were back at the beginning of the year. And what started to move over the week, on the end of the week last week, especially with some of the fighting going on with us in Turkey, is the dollar had a big move and set the high of the year on Friday. Now, if we come and just take a look at the weeklies real quick. See if there's anything I want to point out differently there. And I guess the key thing to me on the weeklies is to look at how the dollar finally did something it couldn't do in the past, which is broke above the 200-day moving average. Now remember, these are futures, and they may actually be different looking somewhat than the cash markets. So go back to the PowerPoint. Let's look at things underneath the surface. Rates dropped on both the 10-year and the 30-year this week. So if rates are dropping, that should be good for REITs, MLPs, utilities, dividend payers, and home builders, and not good for banks, especially regional and insurers. You can't see it well, I apologize, but this blue here is the difference between the 2 and the 10-year rates. And as this contracts, you start to get to the flattening of the yield curve. This horizontal line would be when it's flat, and you can see we're making a move there, and this is the S&P 500 here. And we'll continue to hear about the flattening yield curve in the press, but it's interesting, the markets don't roll over until the yield curve goes back up. And I think that has to do with Fed tightening after the economy recovers from a recession or whatever. AD lines continue to push higher on small stocks and large stocks. And if I look at the NYSE, not to a great extent did it go up, but it went up some. And the only one of the major index ETFs that looks like it's pulling down a little bit are the diamonds. And interestingly, the bonds turned up this week. Breadth, now we're at about the same number of stocks above the 200-day and 40-day as we were a week ago. Sort of neutral. Now, one thing that's interesting is, let's see if I can show that here. At this point where my arrowhead is, was the highs of the year. Here's where and the S&P, over here is where we are today. And we're almost back to that point. Yet look on the stocks above the 200 and above the 40-day, we're nowhere close to where we were. So even though the indexes have pushed higher, we're not getting as much participation as we had earlier in the year, and that might be a problem. 3-month new high, new low, pulled back quite a bit. There's no signal here, except there's plenty of headroom if we decide to have an up move. The daily McClellan, let's just skip this for a second. Let's look at the weekly. You saw we had higher high here, although we closed lower on the day, giving us a red weekly candlestick. And notice we had a zero line reject, and on the summation index, we're dropping despite pushing higher. So we got some clear-cut divergences on the McClellan. That, too, is probably a warning signal. Current buckets are about as neutral as you can get. Not overbought, oversold, about half the stocks above and below the midline in their Bollinger Bands in the S&P 1500. Now this is interesting. On the NASDAQ, we had a Hindenburg signal on Friday, and we had an earlier one 8 days, Thursday, the week before. So we've had 2 Hindis in a short period of time fire on the NASDAQ. And we know that the Hindenburg omen occurs before major market rollovers, but only about 1 out of 4 of them actually work. Interestingly, the NYSE, we do not have one, but we are only 4 new highs. I made a mistake. So that's not new lows. That's 4 new highs away from a Hindi. Sorry about that. Maybe I'll fix that while I'm sitting here. Actually, I can't fix it while I'm doing a recording, so that's not going to happen. Market tone, we popped up in the NYSE, a bearish signal. And on sector strength, the only green left is healthcare. So clearly weakening on the indexes and the sectors. The Canaries broke down below their 8 and their 50 and their 17. Is this a bear trap, and are we going to massively move up this week? Or is this the beginning of something worse? Time will tell. Know your news, so let's take a look. This is from Econo Day. Looking through this, the reds are the things that matter the most. So we've got housing starts, jobless claims, Philadelphia Fed business on Thursday. We've got industrial production and retail sales on Wednesday, as well as the petroleum status on Wednesday. Looking through, do we have many Fed heads speaking? Not really any Fed heads speaking. That's good, because they have a tendency of moving the market. So this is the news and also your earnings. And this is from earningswhisperers.com. They put it on Twitter, so I just copied it. So we are near the end of earnings signal season, perhaps, or getting closer to the end. There's still a big week. A lot of Chinese stocks. I mean, Jinko Solar, YY, Bayzone, Cree, not a Chinese stock, but one that's widely held, Tapestry, Cisco, that's a big one. JD.com, another Chinese, Applied Materials, Zoe's, Voxeljet, John Deere on Friday. So as you can see, there's still a lot of big stocks to report. And as I put here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? This is a tough seasonal time of the market, as many professionals take to the Hamptons for an end of summer respite. Continuing international tariffs and responses drove Friday's sell-off as Turkey fights Trump tariffs. Although growth had a decent week, one might find it hard to ignore the Hindi on the NASDAQ and how close we are to a Hindi on the NYSE. While I suspect seasonality aside, tweets, tariffs, and other news will again drive the market, and many of the big earnings announcements are out, but this is not a week to ignore your stock dates. I actually went back and looked at the market some this week, and a couple of things came to mind. Let's just go back and let's look at cash, and let's blow up the S&P. Not blow up, but just enlarge it. Again, from the low of the market in August of last year to the high of the market in January, that is a pretty strong trend. It's hard to see any significant corrections there. And look what we've been through. We have this significant drop down. We've had another correction, another, one after another. This has been a very challenging market. After each of these corrections, if you look at the news flow, you'll see Market Watch, Barron's, the TV station, CNBC, talking about a giant pullback, the biggest down in years. Yet we still are very close to the highs of the year. So although it's been a difficult market and there's been some major pullbacks throughout the year, I'm not sure that it's time to call it the end of the bull and to go run for the hills. That said, I do expect the news-driven weakness to continue, and some people are thinking that we'll have an October to remember, at least a Friday and a Monday to remember. Last week, if people had asked me, I hadn't shown my account for a while, have I been killed? Well, the funny thing is, I look at these and I tell you how hard it's been over the last couple of weeks. And about a month ago, I was up 60%, or about a little bit over 1.5 million on my trading account. And, I'm not hiding anything. I'm still up about 1.5 million. So I've had some hits and misses. I've had a lot of options plays to buffer drops, and that also buffers some of the gains. But I am up about a little bit over 60% on my 2.5 million that I started the year with. And so that's been pretty consistent over the last 4 to 6 weeks, 4 weeks at least. And if I go back here and just look at last week, the stocks I own, not the strategies, were up 0.93, a little bit below the IBD 50 at 1.6 and the IBD 85, the weekend review, at 1.58, Market Smith at 1.43. But I'll take it, and growth was certainly the winner, because if you look at the S&P 500, it was down 0.25. So I really think this has been a very challenging time to trade. I've seen so many people on Twitter and on the Northern California IBD board talk about how they're back to even, how they lost it in earnings season. I don't know, I won't say the word chicken, but I get cautious and I do a lot of collars and things to protect. But what that does is it also eats up some of my gains. Now, a lot of times I would go in here and I'll look at some of John's signals. And let's just look at a couple things real quickly. Let's go to markets and see if I remember which. I want to add a couple things here. I'm just looking to see if I have it here. All right, let me just add a symbol, add a blank row, add RTY. All right, that'll work. So let's take a look at some of these futures. We'll start with the E-minis. And what I wanted to show you on this is going to be you got a new person sell signal here. After some MACD divergence, you got a blue bar. You still got a weekly and a monthly buy, but this is new, a new sell signal. We have a high jump that's in the middle at 52. The weekly bongo was still green. So at least short term, you might see some weakness here on the E-minis. On the Dow futures, similar things, a new sell signal after some MACD divergence was in the market. A red bar, which is the elder impulse indicator, which is also on a sell. Still on a weekly and a monthly buy, so this is a short-term pullback perhaps. High jump at 38, and the weekly bongo still green. So those are the weak ones. And we look at the NASDAQ futures. Also had a sell signal in TradeStation come in on Friday. And the mid caps, a sell signal, and the small caps, not a sell signal. So message here is we're probably going to get a few more days of pullback. We've got pretty much broad participation to the downside, but we really are much closer to the highs than to the lows of the year. And we've had these shallow pullbacks before, and I see nothing that says this is going to be any different. Again, everything can change by 9:30 Monday based upon what we hear from the news. So let's go into HGSI. And I know this is repetition, and I apologize for that, except it's what I do. So I'm going to start with going into market analysis user groups, major markets plus, and I'm going to rank the major markets by price and volume. It's a top-down view under my name. So we'll go up to the top, T1, and raw count. And whenever I see T-bonds, TLT at the top, and the dollar at the top, and the volatility at the top, I know that it was a tough day or a couple days for stocks. And you could see the NYSE, gold, the Dow, semis, mid caps, treasury yields are all sitting down here near the bottom. Very quickly, looking at the cash indexes, not the futures, that's a difference. I wanted to point out, get into, all right. So you're going to notice that when I go into the view here, which has got Bongo, Hindi, OBV, and Kahunas, that the Hindis did not fire on the NYSE. And that's probably appropriate. When I open up the current view and I look at the Hindi, you see I've got both bar charts and all NYSE. So I've got both sources here. That's why there's two rows. And if I open up one of them, you're going to see smaller these numbers is greater than 79. Now, if I switch this to my webinar view, you're going to notice we have a Hindi. And what I did on this view, I combined, well, I looked at the all NYSE, and that says 69. So let me change that to 79, because I think that's the right answer. And I want to add another Hindi in here. And I want to make that to bar chart, 79. So now I've got both Hindis here. Again, the top one is all NYSE, and the bottom one is bar charts. So that's going to capture all of them. You're going to notice that it's going to go away. So I do not believe we fired a Hindi on the NYSE. I do believe we're close. And I updated the elements of my NYSE on those edge rater charts to be at close on Friday. So they're updated. So very quickly, these are some lousy trend lines I wrote. If you look, extend this one up, we are just coming off the tops. We have a daily bongo has gone red, so suggesting a pullback. We have a kahuna to the downside. So we are pulling back on the S&P, and it wouldn't shock me to see us get a few days of this. If I look at the Dow Jones Industrials, we see a similar pattern near the top of the run-up, pulling back, a kahuna to the downside, and a new weekly bongo to the downside. If I find the NASDAQ up here, which is a little bit higher, we still have the green bongos, and we've gapped down and moved up on the day, but we're still off the highs. But, you know, a lot better feeling about the NASDAQ than I feel about the others. We shall see what happens with the NASDAQ. And then if we look at the Russell, one might expect to see something even less bad. Let's see. Whoops, that's not it. Don't look at that one. Here's the Russell. I don't know if I say less bad, but it's been going sideways. It's sitting right on the 50. And to me, it looks like it's potentially poised to go higher. Didn't have any kahunas to the downside. Notice the Russell, the weekly bongos actually turn red. If I go and look at the dollar, we talked about the dollar breaking out above the 200 on the daily, excuse me, on the weekly, and you could see a big. Now, that kind of looks like an exhaustion gap to me, and it'd be interesting to see what it does come Monday. But you know what that's going to mean. If the dollar is strong, then what do you think gold is going to be doing, and silver? And gold is, you know, how can you be buying this? It's got the moving averages are like a blanket. And then if I look at silver, it really doesn't look any better. And if I look at gold miners, which is even further down here, I can't imagine, and you can see they're breaking down to new lows. So metals look tough. And then let's just take a quick look at the volatility. And you can see the volatility did move up the last couple of days. It's still in a weekly bongo green. Weekly bongo red and a daily bongo green, as it's had a short-term move up and had a kahuna to the upside. Something to watch, perhaps. So indexes make me feel, as I've said, that we could have some further weakness ahead this week. Wouldn't shock me to see this be a down week. But again, the news is going to drive everything. Now, we've got 174 groups, and if I look at the 2-day up, I can see I'm down to 31 positive groups. If I look at the 2-day down, I'm down to 30 groups. So that's pretty neutral. 5-day up is 41. 5-day down is 46. So that's a pretty much a very neutral view, which tells me that the market's been chopping. It's not giving me a trend one way or the other. So normally, I'll go through some of these today. I rank these by 2-day force, make sure the combo ranking is top to on the top. I right-click and I look at what we see. And let's just see if there's anything here that looks good. I see a couple things I like. I need to make sure I change the view here to the view I like to look at during the webinars. I've got a couple things I need to clean up here. So I'm going to make that size there. I'm going to bring back the, there we go, the fundamentals. So here's Alibaba, earnings per share flattening out after some good growth, high PE, below the 200, had a bullish engulfing pattern on Friday. Notice how OBV is turned down here. You know, if I was a guy that liked to short growth stocks, I'd be looking for this to run up here. It's got a couple of moving averages. And once it fails, I would consider shorting Alibaba. But I do think it's got a little run up. Maybe it gets up to the 188 range before it rolls over. I'm not going to go long this for any intent of building a longer term position. It is clearly in a very choppy market. Weekly bongo is red. You can see here a green candle low, which is sort of a reversal signal in itself. And the pocket pivots were earlier in the week to the downside. Overstock.com, not my favorite stock. It gapped up, ran all the way to 200 and closed below where it opened. Did have a kahuna mobile breakout from a squeeze. A weekly bongo turned green. Earnings per share are horrible. There is a blockchain play or a crypto play in this. I don't like that pattern. I would skip that one. Wayfair, you know, this one had a great run up, pull back when they talked about taxing the internet, and has now bounced up again. That does look interesting. I don't like the earnings per share growth, and for that reason, I'm going to look for something else, which is coming up. Mercado Libre, no, here's the one that is coming up. This is Etsy. Etsy changed the way it works with its resellers. It raised its projections, had great earnings, and then interestingly sold off on the day, still closing above on the day. And I think this one goes higher. You've had 3 kahunas in the last 5 or 6 trading days coming out of a squeeze. Of this group, the one I like the most is Etsy. And Stitch Fix looks kind of interesting as well, but it's an IPO and not much earnings per share at this point. So that's enough on this group. I will then right-click back and look at the next group down, which is internet-based services. And let's take a look at some of them. This was the true super stud on Friday with earnings beat and I think a 37% gain. You got to love it if you're in it. But if you weren't already in it, I'm not sure you're going to buy it. Had a Bible gap up, big, huge move from where it closed at 127, almost 128, to where it opened at 115 is $13. That's a little long to put your stop under there. It's a tough one to figure out where to put my stops. Had a big earnings beat. You can see next quarter it's got some big earnings coming in, a kahuna. I love it. I'd rather see it pull back some. Maybe it will, maybe it won't. I have a hard time chasing it, but if you were in it, I would continue to hold it. And why aren't we going down? This did this to me the other day. Let's try this again. Come on, HGSI. This is World Pay. Don't know anything about it. Earnings are out. Nice growth. Bible gap up on Thursday. Did well on Friday with a kahuna. Breaking out of a pattern. It's an expensive stock, but it's got some earnings. Matt's group looks similar. Don't know anything about Alteryx. All these stocks gapped up on Thursday and then on a very down day on Friday went sideways. Spotify had a nice move. Right before PSAR here, had kahunas, pocket pivots, mobile breakout from a squeeze. Bongo Weekly is green. Spotify is an expensive stock that currently doesn't make money. Maybe they think someday Apple Music or somebody buys them. TrueCar, I like this pattern. Broke out on Friday. If I pull up a weekly chart, you could maybe you can see that this has come down a lot, just broke up above the moving averages. This looks interesting to me. This is a Bible gap up on a weekly chart. I don't know what that means, except it's very bullish. I'm going to be looking at TrueCar, not on its fundamentals, but I like the chart. Coupa Software looks interesting. Pull back to the 50, and then on a kahuna, number of pocket pivots out of a squeeze, broke out. I like that one as well. And typically, I would now go through the top 10 groups. I'll go through a couple more. Application software, right-click, electronic arts. I've not been really good at making money on gaming software, just letting you know that. So nice pullback, had a big up move on Friday in a tough market environment. Earnings are out. Like I said, I have a tough time making money on this. To me, it's in the penalty box. I'd like to see it move up some before I get interested or base first. Take two. Here's Twilio. This stock had a Bible gap up on earnings and has moved higher on the week. Don't really love its earnings per share, but if I owned it, I would hold it. Unfortunately, I do not own it. This one intrigued me. It's an IPO, and what intrigued me, 2 pocket pivots in a row. I think it's either 2 or 3. It might be 3. That's 2 kahunas in a row. Mobile breakout from a squeeze, breaking above the 50. I'd put a buy stop above it and not let it get below the 50. If you wanted to chase this on this IPO, it was another one that I liked. And I just basically every day go down these. We're now into internet media. Don't know a whole lot about Yelp, but I think it had earnings come up because it had a huge 30% move on the week. Again, how do I chase something that's up 30% on the week and doesn't make money? Interactive IAC also gapping up multiple times, multiple Bible gap ups. Great earnings per share growth. I just don't know this group or this sector, but look at the multiple and look at the growth coming in after turning around. It's worth doing some research on Interactive Corp. Hoya, Chinese stock, no thanks. IQ, the Chinese Netflix, no thanks. And that gets me down to the group. And I usually only look at the things that are outperforming the group index. Now, retail was strong. I own some retail. I'm looking for more potentially. So let's take a look at some of these because a couple of them looked potentially buyable to me. Lululemon, I like the pattern. Bible gap up here, sideways move, pocket pivot, and a breakout on Friday. Earnings per share growth are slowing down. The PE is pretty high. I love the pattern. I don't love the fundamentals. Let's see if I can find something I like more. TJ Maxx, probably more fairly priced, similar pattern. How about American Eagle Outfitters? Look at the growth here compared to the multiple, pays a dividend, multiple pocket pivots, broke out on Friday. I actually am long this one, so I tell you that so I don't think I'm pumping my book. Also long Abercrombie & Fitch. This one I have hope for, but reality is, as I look at this, oh man, my HGSI is not, oh, I'm in a box. Never mind, hold on a second. Now I bet I can do that. I've got to break above that line before I get too interested. Or I'll probably pull it down a little bit. So we're right at an important point on Abercrombie & Fitch. A big break above that with volume and a kahuna, that would get me excited. I don't like the earnings per share changes. This is a turnaround stock. It's been losing money, and now all of a sudden it's turning around. ANF, I'm in it. It's already had a big move. We'll see what I do with it this week. Maybe I want to replace with Urban Outfitters. Urban pulled down to the 50, got below it for a couple days and broke out earlier this week out of a squeeze. This one looks interesting. Great earnings per share growth as well. Others that I liked in this group, Gap got a position in, and it's had a nice little run up here. It's sort of stalling. Again, maybe I should rotate that into Urban Outfitters. I'm always a big fan of Burlington. Coat Factory, I wouldn't want to shop there necessarily. But again, sideways move, breaking out, earnings to come out in a week, so that might be challenging. Great earnings per share growth compared to PE. This is a stock that just likes to go higher and higher. So there's the best looking charts of the bunch, except for a couple previously seen. I mentioned falling rates are good for dividend payers. So the MLPs are dividend payers, and several of these look interesting. Just go through quickly. Breaking out here is Plains, pays 4.4. Kinder Morgan, sideways move with a kahuna above the 50 out of a squeeze, pays 4.4%. Targa, already breaking out and running, pays 6.7. Equity Midstream pays 7.8%. Plains Group pays 4.5. So I'm not sure that I can differentiate that much from the chart pattern, but I do like the fact that they pay significant dividends. Biotech. Biotech. Take a look at what's up there. These are not the biggies. If you want to see when biotech is humming, you're going to see Celgene, maybe Gilead, Biogen IDEC, not Sarepta, Sangamo, and Anilin. So let's just go through these very quickly because I do see some here that I may be interested in following or maybe even chasing. Hate to use that word. Sarepta, this is the guys that make a muscular dystrophy drug. They've pulled back to the 50. They had a kahuna on Thursday. Don't make money yet. They are the leaders in muscular dystrophy. They're plowing their sales back into development. It's a good story. It's an interesting place to buy if you can pick it off the 50. Sangamo Therapeutics, below the 200, I'll pass. Anilin, also below the 200, actually had a drug approval. I think their drug is like $400,000 per year per patient. Small market, but it's proof of principle of their RNA techniques. I'm surprised they didn't get more of a move. I'm pretty sure it was approved on Friday. Let's just take a quick look. New kind of drugs, silencing genes got FDA approval, $345,000 per year, and it was approved after hours on Thursday. No, was that on Friday it was approved? Nope, it was during the day on Friday. So relatively muted mood. Maybe they're afraid that with the pricing issues in Trump and the small market, but that's a win for Anilin. Ions also has a RNA splicing drug, so that's moving up on sympathy. Now, I don't know anything about this, but I have to admit I like their pattern. This is a high closed doji here, off of this one here. It had a kahuna, a mobile breakout from a squeeze. This is a in development company. There's nothing here that I could tell you why it's great. I'm going to do my research, a high closed doji, and a kahuna on the weekly, a mobile breakout from the squeeze on the weekly. It had a nice move. Don't know enough about it. I'm going to do my research over the weekend. It's on my buy list. PTC, I think this is another one with some muscular dystrophy drugs. And we could see it's breaking out. Kahuna, pocket pivot, mobile breakout from a squeeze earlier in the week. And it does have some earnings growth coming out. It has things on the market. You can see the revenue. That looks interesting. Ligand is an expensive royalty company. They have a lot of products that other people sell and give them a piece. They've had nice growth. I look to buy that when it pulls back. Don't know anything about Corey. Don't like the fundamentals up top. But again, this is similar to that other pharma. Deep pullback, big kahuna, mobile breakout from a squeeze. Probably worth a little bit of research. And then this one looked interesting, Viking Therapeutics. Again, I don't know anything about these. If I don't tell you, that means they're probably not necessarily cancer drugs, and they're not things that I'm necessarily following. But sideways move to the 50 and a kahuna out of a squeeze is what I like to buy, so I'll probably be looking one up. And then BioCryst broke out here And whenever I see 3 days of kahunas in a row out of a squeeze, I pay attention. And this is on my buy list only for the reason it's had this kind of a move. Something's going on there. So those are not the big boys in biotech. And one way of avoiding individual stock risk is just to buy the ETFs. And LABU has pulled back a little bit, as you'll see, closer to the 200-day moving average. That's a way to play biotech, a 3X ETF. Continuing down the list, medical equipment, just a couple here. CDNA, don't know Care Diagnostics at all. Good name, though, for a healthcare company. And it had a buyable gap up on Friday, so it doesn't make money. So I might go more info from the web and look up FinViz and see if it tells me anything that might help me. TOPS revenue. Don't know about it, but it's probably something I might do some research on. It's at the top of its channel. I don't really prefer to buy things at the top of their channel, especially in this market. And then Inogen, talk about missed opportunity. This is a guy, an oxygen company that just continues to do well. I look at the multiple, I scratch my head, don't know what their moat is. They sell and they have an oxygen. They sell, I think they bring oxygen to the patients. Maybe they got a device that's better. But you could see back to November 2017 when it had a breakout, it just has been nonstop. Actually go all the way back to May of 2016. What a great mover. Again, I don't know why it's such an exciting story. It's extended. Too far gone for me. It's an expensive stock. And then lastly, or getting close to lastly, number 9, other retailers. I don't know anything about Caravana, CVNA. It had a big move over the last 5 days. And interestingly, its EPS rank sucks. Does not make any money. It has doubled in size over the last year. Lots of volume. Had a breakout this week. Had a buyable gap up on Thursday. And then had a bullish engulfing pattern on at least on the body on Friday. Coming out of a squeeze. The pattern looks impressive. Do your research. Tapestry. I'm more comfortable with stocks that have broken, that have based, and this one's based nicely. You can see the group strength is strong. Earnings per share kind of slow compared to the multiple. Vitamin Shop. Here's a stock that was dead forever. Something has happened here. This is one that I put on my buy list as well. I don't know, I guess they must have stubbed their toes. Their earnings, their revenues had dropped. And if I go into the weekly chart, you're going to see they were much higher before. So they got a long ways to go. Even if they just ran up to the 200-day moving average, that's 24. That's a double from here. When I see this pattern, anything else I want to show you there? No. I think of Tandem, which is my big winner of the year, although I've taken some profits on it. And if I go back to April, when I first spotted Tandem, that's what it looked like when I first spotted it. And if you looked at the weekly, you'd have seen similar to this stock we're looking at right now. And what I like about Tandem is it just had a great run. What drove me to it was an increase in volume and a kahuna and a liftoff of the major moving averages. And I see a similar thing with this stock here. It doesn't mean it's going to do that, but it's a Vitamin Shop is a $12 stock, not a $6 stock. It certainly has had its challenges on earnings. Bring it back up here. but something's going on here and I might want to jump on board with a little bit. And then lastly, exploration made it to number 10. These guys have been all over the place. Oil up, oil down. A lot has to do with what's going on with Iran. I have some positions here. You could see a big drop early in the week on Anadarko to move up. Great earnings per share growth coming in, but the PE on this one's a little high as well. Concho, kind of a up and down pattern. Again, great earnings per share growth. Diamondback going sideways, great, not as great earnings per share growth. Southwest Energy, this made my buy list. Couple of kahunas breaking out above the 50 out of a squeeze. Great earnings per share growth, small PE, big volume stock. This is one that I thought might have some room to run. Devon, not so much. What else did I like in here? I also like Continental Resources. Y break above the 50 with a kahuna below, mobile breakout from a squeeze, and also excellent earnings per share growth. So perhaps their earnings are starting to catch up with the price of oil. The stocks, for the most part, remain weak. So that's what I typically do on my weekend review. I then take my buy watch list and I throw that in with all of the, let me close that up. I throw it in with all the high close dojis I saw, and then I look for the stocks that meet my price and volume, and then I take them into TradeStation, and within TradeStation I go to my advanced screener and I apply a number of different scans to these stocks. So I did that and I came up with some potential shorts over here in the red, and here were some potential longs. Some of these you've seen already. What I like to do is go back to my buy watch list and point out some of the things that I'm thinking about. Now, in that buy watch list, I further break them out to Bible gap ups, bottom fishing, breakouts, broken out and running, filtered buys, which come out of that TradeStation list, leaders extended or gone, pullbacks ready to run, pullbacks waiting for signal, and special situations, which are usually high dividend payers. So let's first start by breaking these out and looking at were there any types of our industry groups that looked interesting to me. So biotech had several. You saw BioCrest, and you saw Stonebridge Bio, and you saw Viking. I also liked Iovance and Joust. So let's just look at them and see if I can tell you why I liked them. So Iovance has been going sideways, moving up off the 50, had a kahuna, mobile breakout from the squeeze, purely a technical pattern that I like. I would set it, looking at this day, it closed at 1465, the high was 1485. I'd probably put my buy stop at 1490. The low was 1390. The 50-day moving average is at what? 1370. So I wouldn't give it to below 1365. That's about as much as I'd give room on this stock, but I might be willing to buy that. And so that was sort of my buy and sell points. That's Iovance. I do like the pattern. And the other one I liked was Jounce. And why would I like Jounce? I must have done a little bit more detail because I saw two kahunas and a break above the 50. I don't have to go much below where that line is for a stop. So that stop's about 7. I'm buying it a little bit over 8, risking about $1. When I see two kahunas in a row, especially in a stock that's basing, I scratch my head and wonder, and it goes to my buy list. Now, to be very clear, I put it on my buy list. I don't buy it. I put it on my buy list, and then I stick it into TradeStation, and I have my weekend buys sitting here, and I'll be looking for various signals, a Q bounce, a Q box, gap, go with flow. I'll look at John's signals, and I'll look for new flashing signals that tell me something has changed. I don't just buy them because they make it to my watch list. I see a bunch of e-commerce discretionary. I showed you Etsy and Stitch. Chegg I like as well. Its earnings are out, which is critical. I don't want to buy something whose earnings are coming out this week. Why do I like Chegg? Clear uptrend, sideways move, and a pocket pivot. I would have liked a Kahuna too, off of the 50. Doesn't make much money, has a huge multiple, a purely technical buy. I already showed you Etsy and Stitch Fix. I showed you Continental and Southwestern. Specialty apparel, A&F, AEO, Burlington, Lulu, Urban. I showed you all of those. And kind of a store that I don't think I've ever would or have shopped in, but Boot Barn also has been a nice run this year. As you see, sideways and a breakout here. This is a stock that was a $9 stock in November. It's a $27 stock now. Amazing earnings per share growth, but still relatively small numbers compared to multiple. This one looks like it wants to go higher as well. So those are my buy watch. I always like to take and look at shorts as well. And last week it was all longs, hard to find shorts. The week before it was hard to find longs. All I found were shorts. I had to go down my list to find my 10 shorts. I just take 10 that I think look potentially shortable. These are them right here. It's not that I'm going to necessarily short them, but it just gives me a sense if the market's rolling over. And I guess if I'm looking at this and I had to pick the ones that were most bothersome to me, let's look at SBAC and let's look at Texas Instruments. So SBA Communications, Infrastructure, Construction. And you could see it broke down and then it failed at the 200. So this is the day I would have shorted it with a Kahuna to the downside. And there's no moving averages below it. I guess this would be sort of the target would be 152. So it's not a huge move. But I thought this one was likely to go down. And then Texas Instruments, I'd wait for it to break below the 200. Now, it's funny, and maybe I'll talk about PANW when I look at my favorite option trade. This is one that I thought was shortable not long ago. No, it's the wrong one, but that would have been shortable at 1.2, PANW. So I took the short after it failed at the 50, and then I took off my short position, just left the long, and I'll show you later on how sometimes you get lucky and make money on both ends of a trade. But this is Palo Alto Networks, and this is when I thought the market looked like it was rolling over, and I wanted to put some shorts out there, and this was one of them, and I'll show you how I used options to take my short. All right, so just to do some summaries. I think it's a tough market out there. If you haven't been making money, join the crowd. There's many of you who've told me that. I've been sideways for several weeks. This is a choppy market. I've had some big earnings. Some of them have been disasters. For the most part, I was covered, but not all of them. I've had some big wins. Amazon continues to do well for me. But this has been a tough period of this market. I think we've got more toughness to come. I do think we'll be higher at the end of the year, but I think we're going to see some more volatility. So be careful, trade safe, and at some point tomorrow, Sunday, you're going to see a second video from me, which is going to be my favorite options play. Good night, everybody. Have a great night, great Sunday. We'll see you later. Bye.